Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I am Jeff Barton, and I'm your voice in the mortgage industry. The telephone number here is 888-713-2929, 888-713-2929. Write that phone number down because you want to listen to what we have to say on the show today. I have a couple of great guests coming on. Angelica Guerrero from out in the IE. She's going to talk about some difficult clients, some programs. And you know what? There's always a go-to person when you have really hard stuff to do. And she's one of those people up in that area. So you're going to want to listen to what she has to say, as well as Connie Hernandez, who's from out in Covina area. And she's going to talk to us about market conditions, what's going on currently as rates rise and as we try to figure out what has happened since the great big fire a couple weeks ago and, the water damage that's occurring as the rains pour down on Southern California. Seems like the weather situations here and everywhere across the country are getting more acute. There was a tremendous report out just a couple of days ago about climate change. Government's required to put out something along these lines every 5 years, and they did so recently. Of course, initially it was by the president said he didn't believe it. Of course, this isn't belief, this is science. Things are happening, and they didn't never happen like this before. Darryl, what do you think about the weather and what's going on here?
Well, it's obviously completely different. It started out, a couple of years ago, they talked about La Nina and
Right.
El Nino,
Yeah.
and what was forming in the South Pacific that would come up our way in Southern California. But certainly there's hard physical evidence that the ice caps are melting and
Yep.
and the
Sea
glaciers
levels
are
are
moving and
all that.
seawater's rising, and certainly we see more extreme weather conditions.
I think that's the thing. I think these extreme weather conditions are a thing that is going to continue, probably get worse, and certainly in certain areas of the United States as well as low-lying countries. If you see sea levels rise anywhere a foot, 18 inches, and some are saying 5 to 7 feet in certain areas, it's going to really affect. I mean, if you had the sea levels raise here in Southern California 5 feet, how would it affect communities like, Ventura? Or
Malibu.
Or Malibu, right. Speaking of another disaster area, I mean, obviously the Inland Empire, i.e., San Bernardino and Riverside counties, hi everybody out there at KCAA, KMET, and K-Tahoe, our affiliates around California who are carrying the show. I want to say hi to all those great people. Got a call, by the way, from Bill Bruns over at KMET. He says to say hi to you, and he was very nice, asked me about the fire and if everything was okay with Malibu.
Hey, Bill.
Hey, Bill, exactly right. So if you're in those areas, you're probably saying, I don't really care about, the rising sea levels. No, but you do care about weather-related events. We talk about it often. Been talking about it for a couple of years because it affects your ability to get a mortgage. And why do I say that? California, we have a thing called the FAIR Plan, right? And it's the state's insurance pool in high-risk areas for fire insurance. And everyone knows you cannot get a mortgage without fire insurance. There's fire insurance and there's title insurance. And there's obviously homeowners insurance, but that's up to you. But the fire insurance that you get covers about 85% of your house, right? It doesn't cover the whole thing, and it does not cover the value of your house. A mistake made by a lot of people, especially those who recently have lost houses, and anybody who's been through these events in the past will know that the insurance company and the insurance premiums you pay for help you pay for a certain amount of the rebuild. Now, depending on how much you pay in premiums and what kind of policy you have, it's going to determine how much money you get. For instance, my particular policy, if my house had burned down, was 130% of the rebuild cost. Now, there are hard rebuild costs and there are soft costs. Now, we talk about development on the show, and we've talked about infill development, we've talked mass development, we've talked all kinds of things from papering a project to actually building it out. And what does that all mean? Well, the soft costs in any project are like your architecture costs, your plans, your permits, the septic reports, all the things that you can think about that have to go into a project that you submit to a city, a county, a state, wherever it is that you have your entity that's going to give you your building permit. All of these are not in the ground. They're all a part of your intellectual property when you present, as I say, the project in order to get approved. When you get it approved and you start to build, those are your hard costs. So a lot of people don't understand that when you're insuring your house, yeah, you'll insure it for the rebuild, but will you insure for the soft costs, i.e., it's roughly 30%, it could be up to 30% of the cost of the project. For instance, if you have a $500,000, let's call it $1 million because the math is easier, $1 million house, and 30% of that is soft costs, and it's probably not that much, but let's say it's $150,000 of soft costs depending on where you are. If you're on a hillside property, if you're in a fire zone, if you're in a floodplain, there's all these kind of things that you got to deal with. So in insurance that you have to get for your house in order to get a mortgage, the fire insurance in the Fair Plain in Southern California can be expensive. We spend about $5,500 a year. We never made a claim, and that brings up another good point. During the last fire for you, did you guys call in a claim around here in Ventura? Did you call in smoke damage or cleaning expense, anything like that?
None of the above.
Okay, so we've been told, now my house has no damage, zero. However, there are cleaning, and we had our garden area burned. We probably spent, $15,000 building a garden area and trees and steps, and I would imagine we could probably drum up $40,000, $45,000, $50,000 worth of damage. Not to mention, the cleaning of the gutters, the cleaning of all the rugs in the house, anything that would have smoke-filled smell to it.
Well, we had ashes all over everything.
Right, that's
we
what
had
I mean.
to clean up, but the one legitimate thing was the business disruption because we were up without power for almost a week.
Well, that's a real thing.
Internet power,
That's
any of those
exactly.
things, yeah.
They call it non-use, and if you're out there and you're in any of these affected areas, either now or in the past, or unfortunately in the future, and there will be some, believe me, this fire season never stops now. It seems to go year round. It just hits different parts of California, and of course, we're not talking about the Midwest or the West where it seems to burn all the time. There was a huge fire last year up in Idaho and in Montana, and those states are very minimally populated, so it's burning, and when it burns there, it burns out of control until it just goes out. So your fire insurance, really important, and if you do have, you say no damage, think about it for a second, the non-use, like I'm still not back in my house. Now, there's 100 houses in my area that, the power's not back on, the gas is not back on. Well, I have to, rent cars, I have to rent hotel rooms, I have to, this inconvenience, this non-use, all of that adds up to something. So we've been told, yes, make a claim. Now, they could reject the claim, you could fight with them, but if you don't make the claim, you got no shot. So if you're out there and you're thinking about that, that's a really important thing. So your insurance, what kind of insurance that you have on your fire insurance? Very important to check. And if you're in the California Fair Plan, get a copy of that plan and understand how much of your rebuild are they going to effectively pay for. They're certainly not going to pay you your total value of the property if it didn't burn down, but if you don't rebuild that property, it's never going to reach that value again. I want to talk today on the show home prices. Where are we now versus last year? How it's affecting you in your decisions of whether you want to sell your house, whether you want to buy a new house, how much product is on the market. I want to talk to both Connie and Angelica about that because I think in the IE you're going to see some. Well, you probably already have if you're out there shopping right now. You've seen drops in not only the cost or what they're asking, but you also as a buyer now have the ability to be able to negotiate items in the contract. For instance, can you negotiate, if you're doing an FHA loan, up to 3% of the closing costs to be credited from the seller? I think you're closer to doing that today than you were 6 months ago. I'm saying that contingencies are back. Buyers have more power today than they did. However, with rising interest rates, with not as much inventory as we'd like to see, you really are, it's going to cost you, so you have to be able to negotiate something if you want to be in this large, shrinking affordability pool. And we're going to talk a little about that later. I have some notes on it, the affordability index being what it is and how it's going to affect certain people in certain neighborhoods. If you're in a neighborhood right now where prices are anywhere from $500,000 to $700,000 and the affordability index goes up, it means that the prices are falling, and that's a good thing. However, if it's in reverse, you're finding it even harder now to be able to do that.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. Jeff Barton, your voice in the mortgage industry. Telephone number 888-713-2929. Pick up the phone, give us a call, write down the phone, ask some questions of me later, leave a voicemail for me. If you can't get through, I will get back to you. Our email address is info@malibufunding.net. We are on YouTube. If you go to YouTube, it's Jeff Barton, the real estate voice, and we have a number of videos on there. This show has been on there for at least a couple of years now, Darryl, is that right?
That's correct.
Okay, excellent. So that's good. And we also have our Las Vegas real estate show on there as well. We've been talking about all things having to do with a disaster-related needs, I guess, for both insurance and what you have to do to be able to rebuild a property. The reason we're talking about that is because obviously Southern California gets hit with a lot of disaster-related events. San Bernardino, Riverside, whether it's a fire, whether it's flooding, whether it's drought, there's all reasons that you need to know about, both things to protect your home, to protect the value in your home. But one thing we can't protect against, I guess, is let's see, what do they call it? In football, they call them ball hawks, right? In baseball, they might call him opportunist, right? A guy that can take advantage of a situation. In real estate, well, actually, in the Civil War, we called them carpetbaggers. In disaster-related situations, I don't know what you'd call them, and I don't know morally how anyone feels about it, but there are people out there right now, if you have an issue that you've, your house burned down, or you've had flood-related damages, or you just have disaster in your particular neighborhood, your city, your home, your specific home, there will be people who will knock on your door. How do you handle this? How do you look at a person in the face and say, are you kidding me? Or maybe you're one of just the opposite, saying, I've had it. I can't live here anymore. I wish an angel would come and buy this, whatever's left, off my hands. These people exist, and there's always opportunity in the real estate market. If you're an investor, if you're somebody who enjoys the process of taking something and creating something else and then either living in it or selling it. So how do you get a hold of information about, let's say you just can't pay your mortgage anymore. You're on a list somewhere, and there's an opportunistic person out there looking for you, looking for that name. And I don't know whether it's something that you appreciate or whether it's something that's a pain. To me, I wouldn't like it because I tend to not like salespeople. I know I'm in sales. I know, believe me, I've had my share of people slam door in my face, so I know exactly what it's like. But if you have an opportunistic person who views your property or your situation as something that they might be able to exploit or come up with a win-win situation for you and for them, then obviously you want to get in touch with those people. I know during the crash, during 2008, 2009, 2010, there were a lot of people out there advertising, we can save your property. And they're still out there because, believe it or not, I think it's less than 1%. But there are properties still going into default, even today in today's market. Now, we've got great employment numbers. Everybody knows that. 250,000 jobs created last month in the month of November. So we know that what's going on in the economy in terms of jobs is good. But people get fired. Look at all those people at GM that got fired, 14,000 people. How many people are, just bought a house and are expecting to do, work at GM for the next 20 years, just lost their job? Well, guess what? That mortgage is probably going to go into default. Why? Because, you're out of a job. These things happen. Those are what they call opportunities for somebody who is looking for that type of way by which they can take advantage of a situation. Now, as I said, there are those people who want to be saved, who want you to come in and say, hey, make me an offer on this so I can get out of it, or give you a deed so that you take over the mortgage, assign you the property. There's all kinds of, as I say, opportunistic people out there. Morally, I don't know. I mean, I have people who I know that are in the payday lending, and that's another one of these things. I mean, obviously, if you can't pay your rent this month, but your check's coming in 2 weeks, but you owe your rent today, you know, what are you going to do? You don't want a 3-day notice to quit, pay or quit. You have kids in school, you know, so you've got to go to these payday lenders. There's all kinds of situations out there that require decisions to be made of people when they really don't want to make them, i.e. the payday lender, i.e. I got to sell my house because I just lost my job, or I don't want to rebuild because I'm, 75 years old. I've lived in this house for 35 years. It just burned down and I can't do it anymore. I'd rather just, go find over 55-year-old living conditions, and they're all over the place. Most of them are townhomes. I mean, not townhomes. They are townhomes in the Pacific Palisades, but most of them are mobile homes or manufactured homes. In a lot of communities around San Bernardino, Riverside, where they are, I mean, they're controlled, they are safe, but they're, the maintenance isn't on you. It's on the association, the community you buy into. So if you're looking for those situations and you're out there and wondering how many burnout lots can I get in those great areas of, Malibu or wherever else it burned, the Calabasas areas. Yeah, they're out there. Go to your realtor. They'll find them. They'll start appearing on the MLS probably within 60 days. And I would imagine if we get a heavy rain season, you're going to see even more dramatic drops in prices of land in Malibu. And that would be true for the burnout areas, obviously, up in Paradise. It's a horrible situation. Have you seen what's going on up there? It's just
devastating.
My heart
Absolutely
breaks.
Devastating,
I just really can't get my arms around that many people and that many houses. It's just,
just to see houses leveled in all directions.
it's unbelievable.
And to know that there's so many missing people still.
I think they said, what was the count? 70 people still missing? 80?
The count's come down a little bit, but
Yeah.
and the death toll hasn't come up as much, so they maybe found some people that fled.
I think they found some people that were on duplicate lists. Some left, some fled.
It was still in the mid-40s or mid-50s.
Yeah, I
Of
just...
people they were looking for still with the DNA sniffing.
Yeah, I
jobs
know. When you hear about that, you're like, oh, my. And I don't know. Red Cross is obviously a good giving thing. And by the way, I've become much more generous over the last 2 weeks. I don't know if you've experienced this. I know during the shootings out in San Bernardino, there was a great outpouring from the community of people who were willing to help, people who were willing to chip in anything they could. I don't know if the scams hit that particular disaster, but they're out there too. So just be careful. Not only they're opportunistic people when it comes to disasters and land and foreclosures and things like that. Obviously, all things that we need to talk about on the real estate show and obviously on the Mortgage Voice. But there are scams out there for nonprofit. Give money and we'll give to the Policemen's Benevolent Association or we'll give to the Firefighters Association. Just be careful with your money. Direct is always the best way to go. For me, I like to, I'd rather buy someone a sandwich on the corner than necessarily donate it. $50 to some website. It's just kind of the way I am. I don't know about you, Darryl. What's your feeling on that?
Anybody that calls me on the phone and starts reading a script, I'm not.
I hang
not
up.
Interested yet.
Yeah, and there's a lot of robocalls out there right now. I don't know if you've gotten them out there, but just be careful with your money. It's that time of year where everybody wants to feel more generous. They want to feel more connected to their communities. And for me, as I said last week on the show, the disaster actually helped me really feel more connected to my neighbors. And we spent a week together helping each other, helping the community, trying to do anything we could to feel as if we were doing something. I don't know how much we were doing, but we were efforting big time. And there were a lot of people all over both my city and many other cities around California doing that. And I'm sure with the coming rains this winter, it looks like we're going to have a lot of rain, right?
Starting tomorrow.
Right, exactly right. We had a rainstorm last week, and we have a rainstorm. By the airing of this show, it'll be in the past, but it looks like we're going to start an early rainy season. So, if you're out there right now, bear up. I know that the disaster for weather-related areas, especially that federal report that came out that I mentioned earlier, If you want to go online and see it, it's pretty daunting, and it pretty much nails out the next 30 to 50 years of what will happen if nothing happens with global warming, whether it's man-made or not. If you can do one little thing to be able to help, I say it's an effort that will one day catch a tidal wave, and then everybody will be doing it, as opposed to the people who deny it, who I think are just, I don't know, they're self-serving. Anyway, my name is Jeff Barton. I'm glad you're listening to the show. We'll be right back. This is Jeff Barton for The Mortgage Voice. Thanks for tuning in.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry, 888-713-2929. And you can pick up the phone and give us a call. We talk mortgages on the show. We talk disaster-related stuff the last couple of weeks because of the fires that have been happening in Southern California and Northern California. Certainly rain's coming this winter. It looks like we're going to have a very rainy season. So we'll talk about that danger and disaster. We've always got the drought to deal with. So here in Southern California, we have a lot of things going on. Now, man-made disasters, mortgage rates, they're going up. And how does that affect affordability? How does that affect your ability to go out there and buy something? Right now, refinances are, well, you know what? The rates really aren't that bad. But before we get to any of that, I wanted to talk and introduce Connie Hernandez, who's been on the show many times, and she works over at PMA. Connie, how are you?
I'm fine. Thank you for asking, Jeff.
Okay, very good. So we were talking just briefly off air, and I wanted to bring that conversation to the audience simply because you asked me what's going on out in my area. People are complaining that the business is kind of slow right now. I would say that in my area, we just had a horrible fire, as you know, so I'm not really sure what is happening. I don't have a read on it, but generally this fall, it's slower. I mean, a lot of people are complaining. I see lender friends who are complaining, although I see brokerages doing okay if they've got a large enough sales force.
I want to tend to agree with that. I'm seeing, the fact that the market on the rates took a tiny dip on the 16th, that I'm sure it's sent some encouragement out there. But I do see that there has been kind of tapered off in the market as far as purchases. Even some of our refis, as yourself, I have other friends in the industry that have said they're a little bit slow in their office. I have title companies coming in asking for business.
Right.
So
do I.
That tends to give me an idea that, it's not just my immediate area that's slow. I mean, I'm seeing more title reps in my office now than I have in several months.
Right. No, it's so funny. All the businesses related to real estate sales and the loan business. I mean, there's so many ancillary escrow, title, inspection companies, cleaning companies. There are all kinds of storage companies, moving companies. I mean, you think about it, there's probably 1 in 9 people in the U.S. who work in industries related to what you and I do on a daily basis. And I know people are hurting out there in our business. And do you think, if you're a buyer right now, are you happy or are you nervous?
I think for the most part, it really depends on their individual situation. I mean, we have those buyers that are strong buyers that need a home. They're renting, and rents, as you know, are really expensive, and it doesn't really look like they're going to go down anytime soon because, obviously these landlords have mortgages that they have to pay, and, there's a demand for it. So I don't see the rents going down. So then you have the choice of ownership or renting, and obviously, I believe that there are a ton more benefits to owning a home than there is paying someone else's mortgage. So with that being said, I think that for the most part, if you're in a financial situation where you have a stable job, stable income, it's still the better option to purchase.
No, I think so too. And I think, a couple things I read. One, here in Southern California, we're probably only going to see about a 4.5% to 5% increase in value in properties this year, which is down from a year before about 2%. And also that the availability of properties on the market is probably not going to increase because they're not building fast enough. We probably need a million new homes in the U.S. each year, and they're just not building fast enough. What does this say about your market locally? Connie's out in Covina, of course. Is it West Covina or Covina?
Well, I'm in Covina,
Covina,
just
right.
Neighboring to West Covina.
Of course.
And I think in the areas we have some really unique, very high-end homes. We're talking about $2-3 million homes, and maybe literally just blocks away, we're talking about $500,000 and $700,000 homes.
Right.
So we do have a unique situation where we have pockets of very high-end homes, which, by the way, I don't think are moving as quickly as they were before.
No.
But your mid-priced homes in our area are still $450,000 to $600,000.
Mm-hmm.
So those are definitely getting movement. And of course, everything's a little bit tighter on the lending end now with stricter regulations we need to follow.
Yep.
And making sure that all the the I's are dotted, the T's are crossed, and that obviously takes a little longer than what we were used to dealing with even 2 years ago.
Right.
So, with that being said, in our area, there still is some movement. I don't see as many for sale signs up as I did maybe last year. I'm not sure if people are worried that if they sell their home, where they're not really able to find a home to move into, unless they're downsizing. Downsizing would probably be a completely different conversation.
Yeah, and I think ownership is always the best way to go in terms of future long-term. If you're looking for short-term, let's say you only want to be in a property, whatever the minimum is before you can sell it without short-term capital gains, 2 years, 4 years. What are you suggesting to people, that they wait until property values come down a little bit? Or are you saying that because of the rising interest rates, now's the best time because it'll be the cheapest to get into a property? And like you said, we did see a dip in interest rates. 4.875 is really the 30-year fix that I saw recently. So that's less than it was 2 weeks ago.
Well, there's always a question of the reason why you're purchasing. If you're purchasing because your rent is just a ridiculous amount of rent that you're paying, then
right.
Really now it comes down to where if you wait, unfortunately, I don't have a crystal ball, and I think all logic has been thrown out the window when it comes to predicting what the rates are going to look like. So with that being said, if you wait and if you can definitely afford your payment with the given interest rates now, and you can live with the price that you're going to pay for the area you want to live in, then I would say buy now, because you really just don't know what's going to happen with the interest rates. And if you can afford to live there with the given situations, the given property, the given payment you're going to have, I would say it's better to do it now than to take a chance later.
And are you seeing more older buyers, younger buyers? Who's coming into the market in your area?
I'm still seeing younger buyers.
Good.
I don't know if it's because they're summer's just ended and there were a lot of weddings. So I actually had quite a few clients that were newlyweds that are combining incomes and buying. I'm even actually seeing in some instances where the parents are contributing to helping the children buy homes.
Right, and I think based on non-QM too, there are different programs that you might be able to utilize in order to purchase, especially if you have help on the down payment. You get anywhere near 25% down payment, you probably have less restrictions on your income and FICO, right?
Yes, that is true. The larger the down payment, obviously you have more of your own personal stake in it, so then the very heavily guidelines that we have to abide to, they lighten up a little bit.
What do you think we're going to see in the new year in terms of more product? Obviously, I want to see, a ton more product so that prices drop, and while rates rise, we're still going to see, a pretty even buyer to seller market. What are you seeing? What do you think about out in your area?
When you're saying product, are we talking about
houses, new houses?
Or new houses?
Mm-hmm.
I would love to see more affordable homes.
Yep.
Obviously, it's needed in our area, and I think that, I've been around long enough to where, it was big for the housing markets to have influenced by government situations.
Yep.
They would put out HUD homes that were, supposed to be affordable homes for the communities that needed them. I just don't see that.
I haven't seen that in a long time. No, we don't see HUD homes ever again. Usually a HUD home is one that's been foreclosed, that'll be put back on the market. So, you're kicking one family out and you're bringing one family in. Listen, Connie, we have about 45 seconds left. Could you shout out your phone number, let people know how to get in touch with a great agent in your area?
Oh, thank you so much.
Sure.
You can reach us in the city of Covina. We're on 101 North Citrus Avenue, corner of Citrus Avenue and Badillo. You can reach us also at my office number is 626-918-2419, and this is Connie Hernandez.
Thank you, Connie, very much. I really appreciate it, and, we'll have you on again soon just for an update about what's happening at the end of the year.
Thank you so much, Jeff. Have a great day.
And you too. And I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry, 888-713-2929. Pick up the phone, give us a call. You can email us. You can reach me on my Twitter account is @Jeff6493. I have bartonblog.net. A number of different ways to get a hold of me if you want to. I'm on LinkedIn, of course. I'm on Malibu Funding, Inc., which is the company that sponsors the show and pays me. They have a Facebook account. By the way, I want to talk about Facebook, LinkedIn, Alignable, Instagram, Snapchat. All the social media sites have come under some significant heavy pressure. We are now getting real information about what goes on there at Facebook, what had been going on at Facebook for a number of years, the amount of information that they knew about hackers, whether it be for the election or whether it be for any number of things that phony accounts were set up in order to influence people to buy stuff, to vote for stuff, to be a certain way, to take political stances. So what is, and Daryl, I want to ask you, what is your opinion, I guess, on how this is being done and if people even care that it's being done?
Well, first of all, if there's a service which you put in spaces in the name and it's pronounced a line of bull, I'm thoroughly amazed.
So you know Alignable? Oh, very nice. A line of bull.
A line of bull.
That's excellent.
Okay, well, I think that may be attributed to all of them. But, at this point, I think Facebook is just something that people prance around for fun. I mean, they say that any posting that doesn't have a picture, people don't even stop and look at. So, I mean, it's just surface level. People don't get do legitimate business transactions or that, or take anything they see on that seriously. And, LinkedIn is more business oriented. If somebody says something on there, it's interesting. I was listening to a program that was recorded earlier, and someone said the subconscious mind does not know what's true and what's not true. Mm-hmm. Just takes in information and doesn't have the ability to reason. And, some people think that that's a justification. Well, I read it on Facebook. I know it's got to be true.
I see. Right.
And so, whether we know something's true or not, and using that as a justification is scary to me. And I think people are starting to break down that wall a little bit and not use it as a point of reference anymore. And just use it for entertainment purposes, use it for fun. I think that was maybe what it was originally intended to do, rather than, swing elections and
what political. Happened? I mean, I remember when I first got a Facebook account, it was much more, like you say, it was social. You were able to communicate with your friends, talk. Then all of a sudden it got to be, how I can sell stuff. And in our business, in the real estate and mortgage business, it has become the marketing vehicle for, 60, 70% of anybody under 50 years old. It's just the only way that you get your name and your face and your profile and your brand and all this stuff that I'm like, I didn't sign up for all that.
Well, as you probably know, I'm a college professor.
Yes, I do.
And one point, a class survey went out, and it said 70% of the people in college these days, Facebook is their number one source for news.
In college?
70%.
What's the news feed? They just go on people's accounts. I mean, there is no central. Hi, I'm Facebook. Here's all the news of the day.
Sure not. It's just what people post.
That's just what people post. Well, I belong to several groups. I don't know if you do. Several real estate groups. I also belong to a podcast and independent radio show group, and it started probably not that long ago. There were a few of us, then there were several of us. Now it becomes dominated by the loudmouths who just can't stop posting. So I'm not going to be a member anymore. What happens to people in spaces that they think, one, that they can dominate, or their voice is the one that needs to get heard the most?
And the moment you disagree with somebody, they start banning you, unfriending you.
Oh my gosh! Right. All the stuff that happens within that space. So the reason I bring all this up is because if you're out there and you're looking for a house or you're looking for a mortgage, and you see ads on your Facebook page or your LinkedIn page or your Instagram. I like Instagram because it's pictures, few words, couple hashtags, that's it, you're out. But even there, you will see the same pop-up ads, the same delivery of information that somebody wants to sell you something. Just choose how you want to be communicated to. Don't let it just roll by. Say, okay, I wanted to be a business contacted in a certain way on this particular site, whether it's Facebook or what did you call it? A lineable? What is it?
A line of bull.
A line of bull, yes, and I like that too. And by the way, those people are incessant. They don't leave you alone. Oh my gosh, I signed up one day, and all of a sudden, every day, I got 20 new friends. I'm like, they're not my friends. I don't even know these people.
Yeah, it's just that, used to be 3 people would wish me happy birthday. Now it's 1,500. Maybe I know 3 or 4 of them.
Exactly. Congratulations on your work anniversary. I didn't even know that was a thing.
With LinkedIn, it'll send you a notification that X number of people are having this, and then it'll give you a simulated response that, put words in your mouth. Click here if you want to say, okay, thanks.
Oh, I know.
Click here if you want to say, hey, great for you.
Exactly.
Click here if you want to say, hey, I don't care.
It's just so basically it's nothing that I've generated myself.
Right.
I just click buttons and I feel good or bad. All right, let's get to mortgage rates. Mortgage rates, as I said, did tick down. Connie mentioned it on a previous segment. 30-year fixed rate, roundabout, we're seeing 4.875 to 5% rates, which is better than the 5.125% rate we had about a month ago. So rates are okay. It is the holidays. Maybe this is the gift from the people who are pushing these rates out. The FHA VA rates 4.375 to 4.625%. The 15-year fixed 4.375 to 4.5%, and the 5-year ARM 4.375. So long gone is the low 4% mortgage, the high 3% mortgage. They are long gone. We're looking for another rate hike. Now, the Fed comes out each and every month or two with the Federal Open Market Committee meeting minutes, and those minutes talk about things that are going to affect markets, whether it's the stock market. And by the way, if you have money in the stock market, you are nervous right now because there has been a sell-off. We've seen volatile up and downs, 400-500 point swings on daily basis, if not weekly. All of 2018 gains have been wiped out. So yeah, you're nervous a little bit. Maybe you're looking for a safe harbor, a shelter. But in terms of the rates, in terms of how those rates are affected, there's a term called neutral, and the Fed talks about what neutral is. There's a vice chairman of the Fed. Obviously, Jerome Powell is the head of the Fed. Vice chairman, guy named Richard Clarida, and he is, I think, New York Fed vice chairman. And he talks about neutral in a latest article I read on Mortgage News Daily, and thanks to those people once again for putting out some great stuff. What is neutral? It means when you have a Fed rate, i.e. that rate which is up or down that Trump calls terrible, they're raising the rates. Yes, I know they're raising the rates, which is a good thing up until we get to neutral. Now, neutral is that place whereby inflation is under control and the economy is still growing at between 2.5% to 4%. That's neutral. That's what the sweet spot, the swing that, the Sultan of SWAT wants to get his pitch down the middle. That's exactly where we're trying to get to, according to Clarida. And where are we now on the search for what is neutral? Usually it's raising of the rates enough so that we're cooling the economy down to where it should be, as opposed to the tax incentivized or induced growth rate that we had. Now, remember, we had the largest tax reduction in U.S. history last year. So that money, which has been freed up by corporations, has helped drive the stock market, has helped drive the economy, has helped drive consumer spending. But we don't have that anymore. So tightening of the interest rates so that the economy is between 2.5% to 4%, that's a thing they call neutral. And when you're looking to any further indication from the Fed, you want to hear that number, hear that name, that we are approaching neutral. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry, 888-713-2929. That's the telephone number, and that's me. Pick up the phone and give me a call. You know, we can help you with your mortgage. We can help you with some real estate-related issues, questions, problems. But, however, if you don't want to call right now, just write down the phone number, 888-713-2929. Call me. Leave a message. Email me, info@malibufunding.net. I have 60 to 70 different great people who work for me in 10 different states who can answer any question you're going to have. We have people that can just cookie cutter and get it done fast. And we have fixers, people that can do things that other people just don't want to because it's too hard. I have one of these people who is very well-versed in difficult loans, Angelica Guerrero, who is a loan officer for Malibu Funding up in the 760. Angelica, how are you?
Hi, how are you, Jeff?
I'm fine, thank you. And how's your holiday season starting off?
Oh, I haven't even started yet.
Oh, you're kidding. So you've been busy,
Yes.
obviously.
Yes. I'm kind of like a last-minute shopper all the time.
Yeah, I am too. Now, I know you have a family, and I know you're making sure that all your kids are well taken care of during the holiday season. Do you slow down at all? Does your business take a day off? How's it going for you in terms of that during the holiday season?
You know what? It's I've been blessed every year. During the holiday season, I always have, a lot of business either in process or closing. I mean, I have always closed loans at the end of December, the beginning of January, but I've never been, slow during, especially November and December.
Okay, now
I've always had business.
Tell the audience what areas that you work in so that they're aware of where you're talking about when you're talking about business.
Hesperia, Victorville, Adelanto, San Bernardino, Riverside. I have clients all over, even LA right now. I have clients.
Give me your feeling on the pulse. What's happening out there in the real estate market?
You know what? It's up here in Hesperia. There's a lot of business, purchasing as well as selling. And with this new programs that we have for investors where, it's kind of like not so much stated income, but almost like no doc.
Right.
We're getting really busy with that right now.
Tell me the name of the program.
The one that I'm working on right now is Simple Access.
Yep.
And it's basically if you're an investor, you have investment property where you've been renting them, it's just really no doc, like no income, no assets. Sometimes they might ask for assets, but we can use whatever they're cashing out as assets. Mm-hmm. And it's just simple. I think...
These are investment property refis? Cash out refis?
Yes. Cash out refinance. And you could also do purchases, which it's a little bit different when you do a purchase, but it's not as when you're doing a full doc loan. It's not as much work as with with a normal conventional FHA deal. It's not the same. It's a lot faster.
How much do you have to have in the property if you're doing a cash out refi left? 20, 25%?
It all depends on your credit score.
I see.
I'm doing one right now with a 620 score, and they're letting him go as high as 75%.
Oh, that's
and
pretty
then
good.
I have one, with a 711, and she's going as high as 80%.
Okay, now I have billed you as a person who solves problems. Tell me about some of the issues that you have with your most difficult clients.
I think my most difficult ones, it's always credit issues.
Right,
I mean, no, not everybody has a 780 credit score.
right.
I mean, I have worked with clients that have a 550. We work on the credit a little bit, 30, 45 days. Sometimes in the middle of the transaction, their credit drops for whatever reason, some old collection or something that just comes up and, we're not expecting it, and it obviously delays the file. But, I mean, there's always ways to work around that.
Now, let's say somebody is in a real estate purchase, and you have a customer that is a low FICO score, and you need it to maintain a certain FICO score in order to qualify for the program. Something happens midstream, and you need more time. That's a very stressful situation that I know that, for instance, I know you pick up a lot of clients who have issues with both credit and qualifying for loans, but that you try to help. The stress in the deal in terms of trying to keep it all together is what you do. Tell us about some of the experiences and maybe some of the difficulties you have in situations like that.
I mean, it's stressful all the way around, not just for me, because I usually process my own files. So it's not only for me, but it's also, the listing agent, the client that wants to get in their house right away. And, sometimes they get tired of waiting. But I guess to me, the most important thing is communication, you know. As long as everybody knows what's going on and they know how long it's going to take and we explain everything. I mean, I've been very successful closing all those files. As long as everybody knows what's going on and we're getting extensions and getting what we need to get done, it'll close. It'll take time, but it'll close.
Right, and I think when people get into situations, into a deal, and there's a buyer and seller, there is a great want to get the deal closed, however it takes, rather than to try to get out of the deal and go find another buyer. Don't you think that's true?
Yes, it is. It is.
Right, okay, so product. What is the product? Is there a lot of product on the market right now up in your area?
There is. I mostly work with FHA, conventional. We're starting to do a lot more VAs just because of VA goes down to 500 mid-score. Right. And they still allow you 100% financing. So, but now, like, we're getting into the one that I just told you, the investment one. Yes. And that's getting very popular with a lot of people for refinances.
Well, right, because I think a lot of people bought houses when they were cheap and did put renters in them, and now want to take the equity out. Isn't that basically the strategy?
Yes, yes.
And so, in order to take equity out, you have to find a program that's willing to do that. And these programs are pretty new, right? The ones where you're basically doing a stated income property on an investment, as long as you have 20-25% in it.
Yes, I think 20-25% is about right. It all depends on the credit score, but I mean, like I said, you just learn to work around them. And then the AEs that I work with are, I mean, they're just great. Any questions that I have or anything that I need, they're just willing to, just work around everything to get the files closed. And that helps a lot too.
Okay, so busy time of the year, this time of the year. Now, I hear a lot of people say, I had my best deal ever in December, or I had my best, month ever at the end of the year. Now, I know you were saying that you've been blessed that your business does pick up around this time of year, but what are you seeing out there in the market in general? Do you think that there's a lot of excitement in the real estate market, or are people kind of wary? I mean, what is happening? The reason I ask all these questions about the market is because we don't often get somebody with your expertise on the show from your area. So I just want to make sure that people are aware of what's happening in the market, and if there is an opportunity or if the prices are good, they can take advantage of it.
I mean, up here there's a lot of activity, like I said, to purchase, to sell, because like you said, a lot of people purchased these homes, 4 or 5 years ago. I mean, right now they have around $200,000 of equity, and everybody's taking advantage of these programs. And, a lot of my business is referral, and I have a lot of old clients that keep coming back to us because, we help them. Right. If their file needs a little push or a little fix here and there, we do it for them. We don't just say, well, I'm sorry, your credit's not in the 700s, come back later. No, we work with our clients and we help them get to where they're supposed to be at in order for them to get whatever they need, whether it's a refi, a sale, a purchase.
Do you enjoy helping people?
I do.
Mm-hmm.
I do. I get a lot of people that, they come to me and they say, you know what, I don't think my credit is good. I think my credit is really bad, and I'm going to have to wait a few years. And, like, for example, I have a lady right now purchasing a home, a VA, and, she's just excited. She thought she was never going to be able to buy a house ever again because she lost one 5 years ago.
Mm-hmm.
And she said, I didn't think my credit was good, and I didn't think I was ever going to be able to buy. We ran her credit. She needed to do a couple changes, and she's ready. She got an offer accepted, and she's excited.
Excellent. Hey, could you shout out your phone number quickly, Angelica, so that people know how to get a hold of you?
Yes, 760-561-2491.
Thank you very much, and thanks for coming on the show. I really appreciate it. I know that it was...
You're welcome.
Yeah, okay. Happy holidays to you.
Same to you guys.
Thank you. And I'm Jeff Barton. I'm your voice in the mortgage industry, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.